So welcome to this video, another in the Research Cash Virtual Grant Writing Workshop series. This video is Tri-Agency Grant Financial Administration. The Aurora Research Institute and Hotisera have put together this overview to help people new to research understand the nuances of administration of tri-agency funds. If you want more information after the presentation, don't forget to check out the rest of our documents and videos posted in this section of our website. So there are multiple policies that govern what you can and cannot spend your research funding on. These same policies also outline how you'll have to be accountable for your spending once you've got your research funds awarded. The most important of these policies is the Agreement on the Administration of Agency Funds and Awards by Research Institutions. This is a legal document signed by the President of the Tri-Agency Funding Agency, that's NSERC, SSHRC, or CIHR, and the administering institution. It's usually the president or vice president of a college or university. The agreement lays out the roles and responsibilities for each party, the obligations that the institution has, the reporting requirements, who owns the equipment, and conflict resolution steps. The second most important policy is the program, so the funding opportunity that you're applying for, literature or funding program guidelines. We looked at examples of these in the session on creating a research budget. This is documentation that's specific to the grant or the funding opportunity that you applied to. From the example we looked at in creating a research budget session, you cannot use funds for the NSERC Applied Research Tools and Instruments Grant to pay for someone's salary. You can, however, use funds from a SSHRC Connections grant to pay for someone's salary under certain conditions. The third on this list is any relevant agency agreements with grant recipients and/or administering institutions. And this is a handy catch-all for any institution or agency-specific agreements in place. There may not be any relevant agreements with your institution. It's a good practice to check with your institution's finance office just to be sure. And finally, the Tri-Council Guide on Financial Administration. This is a document published by the tri-agencies. The guide is a resource for grant holders and administering institutions to understand the principles and directives that govern the administration of Tri-Council awards. And you can find a copy online. This presentation and the accompanying review resources provide an overview of TAGFA. It is important to take note that the tri-agencies have recently simplified and provided additional flexibility in the use and administration of granting funds. So effective November 1st, 2019, the agencies have released a final version of the new tri-agency guide. And instead of listing specific expenses as eligible or ineligible, the new guide describes a set of directives and principles that govern the administration of tri-agency funds. So, as a quick review, because this is important, the tri-agencies award research funds to eligible institutions. So these are usually universities and colleges. And those institutions administer the funds associated with the implementation of a research project. Funds are not awarded to individuals personally. Not all institutions are eligible to receive Tri-Council funding. And in general, to obtain Tri-Council eligibility, an institution must be engaged in research and training in Canada, comply with requirements, policies, and procedures set forth in the funding agreements, have effective policies, administrative systems, procedures, and controls to ensure the funds are used as effectively as possible, are accounted for to the Canadian people for their use, allocation, and outcomes, and that the activities supported are conducted in accordance with the highest ethical and financial standards. So that's a pretty high bar. In the NWT, there were 4 institutions at this time and that are eligible to receive tri-agency funding. And they are Aurora College, the Dishenta Center for Research and Learning, the Inuvialuit Regional Corporation, and the Institute for Circumpolar Health Research. These institutions have gone through a rigorous eligibility process with the respective agencies, which included an application, completed financial management risk assessment. They have provided audited financial statements, institution research policy, strategic plan and research mandate, a mission statement, their latest annual reporting. So in addition to Tri-Council eligibility, institutions conducting publicly funded research must abide by two fundamental policies set out by the Tri-Council. This is outlined in the funding agreement between the institution and the agency. The first is applicable only to research that involves humans, and it's the Tri-Council policy statement on ethical conduct for research involving humans. So this document covers the ethical conduct of research involving human participants, covers everything from informed consent and privacy, all of the risks and protections that research participants must be afforded if they are going to be included in a study. The second edition also includes a chapter dedicated to research involving First Nations, Inuit, and Métis people. And it's available online. There's also a free training course available through the Tri-Agency's panel on research ethics. So if a researcher wants to conduct research that involves humans, they can take the course in research ethics. There is a link available among the research cache resources on our website, and it's also available from the panel on research ethics. This is a Tri-Agency panel responsible for reviewing research ethics. The second policy is the Tri-Agency Framework on Responsible Conduct of Research. So this document describes the policies and requirements related to apply for and manage agency funds, performing research and disseminating results, the processes that institutions and agencies must follow in the event of an allegation of a breach of agency policy, and the framework clearly delineates the responsibilities of the researchers, institution, and agency in supporting and promoting positive research environment through which the benefits of research can be maximized. And that's also available online. So all researchers should review and have a good working knowledge of both of these policies. And for anything that is still unclear, please seek direction from the Office of Research within the institution that you're applying for funds through, as it's their responsibility to ensure that you as the researcher and themselves as the institution are compliant with both of these documents. So for Canadian institutions that wish to administer grants, they must meet the following requirements and submit supporting documentation. There is an application letter. There are supporting documents, including a letter signed by the president or delegate of the institution requesting institutional eligibility, including a statement confirming that they have read and are willing to sign the agreement and comply with the requirements, policies, and procedures specified in it and relevant to a particular grant or award. They have to submit background information, so the institution must be engaged in research and research training and related activities in Canada. The institution must recognize the vital importance of research and the new knowledge and applications that it creates, the knowledgeable and skilled human resources developed through the process of conducting research, as well as the importance of peer review, which ensures that funded research meets the highest standards of excellence. Other supporting documents are a short history of the institution, the mission statement, policy on research, the current strategic plan, research mandate of an institution, the latest annual reporting, a statement of Canadian incorporation or constitution, information on governments, documentation describing the status of your institution. The compliance requirements are that institutions must promote and assist research and therefore must develop and implement effective policies, administration systems, procedures, and controls to ensure that the funds are used as effectively as possible, are accounted for to the Canadian people for their use and allocation and outcomes, and that the activities supported are conducted in accordance with the highest ethical and financial standards. More supporting documentation are audited financial statements from the past 2 years, financial management risk questionnaire, statement attesting that the institution has an approved policy that follows the requirements of the current edition of the Tri-Council policy statement on ethical conduct of research involving humans. The same goes for the framework for responsible conduct of research. And if your institution conducts research using animals, whether it's in the lab or in the field, there needs to be a statement attesting that it maintains a valid certificate of good animal practice from the Canadian Council on Animal Care. As you can see, our tri-agencies in this country set a very high standard for institutions who wish to hold funds from them to support research. And when it comes to the administration of tri-agency research funding, the roles and responsibilities of the tri-agencies, the administering institution, and the grant recipient are all outlined in the Agreement on the Administration of Agency Grants and Awards by Research Institutions, and any specific program or funding opportunity guidelines. So the following is an overview of those roles and responsibilities. And just to recap, the grant holder, that is you. You are the researcher who has been approved because you wrote an excellent proposal. You've been awarded funds. The administering institution is the institution that you are applying through. They are the ones receiving the funds and administering them as per your direction. The funding agency is, of course, one of our tri-agency funding agencies. So the grant holder has the authority to use and grant the funds. They can delegate to others their authority to use grant funds. They have signing authority to authorize grant expenses and any charges or adjustments made to the grant account. The administering institution is responsible for having policies and procedures, the controls in place to ensure that all the expenses using Tri-Council funds are in compliance with agency requirements, grant funding agreements, and all of the policies. They monitor the eligibility of grant holders and advise the agency of any changes. They withhold or withdraw approval of an expense that is not in compliance with the agency guidelines. They provide training on the institution's policies and practices and oversee any grant amendment requests, reporting financial reports as requested annual reports, and they keep complete and accurate records and reporting on the use of agency funding for at least 7 years. And so the grant holder and the administering institution are in partnership to represent to the funding agency that the research funds are being used ethically, responsibly, and accounted for, and all of that for 7 years. The funding agency sets out the general terms and conditions governing the administration of the grant. They communicate and consult with the institution on the introduction of new policies or changes to existing policies. They make funds available to grant recipients and conduct periodic reviews of the use and administration of grant funds. They oversee the approval of changes to grant administration and terminate a grant when its requirements can no longer be met. So here's TAGFA. The document is published by the Tri-Agency. The guide is a resource for grant holders and administering institutions to understand the principles and directives that govern the administration of Tri-Council awards. And a copy is available on the NSERC website, actually. So in addition to outlining what Tri-Council funds can and cannot be used for, the Tri-Agency guide outlines the policies on additional financial matters that arise during the course of a project. So, for example, what happens if proposed activities change? What happens if a project isn't completed on time? What happens if research personnel change or need to go on leave? And the reporting requirements along with those. The following section provides a brief outline of financial matters with respect to Tri-Council grant administration. And of course, all of the eligible and ineligible expenses and funding policies are outlined in detail in the Tri-Council Guide on Financial Administration. The use of Tri-Council funds are governed by 4 basic principles. The expenditure must contribute to the direct cost of research or research activities for which the funds were awarded. So you'll recall from a previous session the difference between direct and indirect costs of research. Indirect costs include things like administration fees or the lighting and the heating bill for a building. The expenditure cannot be provided by the administering institution to their research personnel. The expenditure must be effective and economical. It achieves the intended outcome with due regard for minimizing costs by avoiding unnecessary expense, and it optimizes the use of the funds. And that doesn't necessarily mean the purchasing everything at the lowest cost. The expenditure must not result in personal gain for members of the research team. The concept of personal gain refers to using grant funds to serve an individual's interests or attain a personal advantage and or profit that outweighs the benefit to the grant-funded research and activities. In the following slides, we'll go through some examples of eligible and ineligible expenses in each of the 5 directives and following the 4 principles of tri-agency financial administration. There's your 5 directives. So the first directive is employment and compensation expenses. So some eligible expenses are having postdoctoral fellows paid through your grant, trainee stipend for students. You can pay consulting fees or subject fees, subcontract costs, project coordinator salaries, that's only under SSHRC, and employer's portion of the mandatory compensation benefits. Whereas some ineligible ones, as we know, any form of compensation to co-applicants and collaborators of the grant, that's again, no personal gain. Administrative charges and fees, and that's because those are considered indirect costs. And then individuals expected to work on the research funded as a collaborator per the funding agreement, again, personal gain. So you can pay people from your grant, but then they cannot also be listed as collaborators or co-applicants. That's the distinction there. So the second directive is goods and services. So eligible expenses, you can recruiting costs for your research personnel, safe disposal of waste, books, specialized office equipment, training, development of new techniques necessary for research, professional association membership. All of those are eligible goods and services expenses. Ineligible pieces, so staff awards and recognition that aren't directly related, they're considered an indirect cost. Education related costs that are not, because they're not directly related to research. Basic services, those are all indirect costs of research. Insurance costs, regular clothing, as differentiated from clothing you would need specifically for research if you need specialized PPE or something like that, but just regular clothes, yeah, buy those yourself. Monthly parking fees, for example, these are all indirect costs of research. The third directive is travel and travel-related expenses. Fairly straightforward, though we know that travel costs are much higher in the north. Transportation at the lowest rate, your meals and accommodation, no alcohol, travel insurance for cancellation or health purposes, eligible. Safety-related expenses for field work, so that could be, maybe you're hiring a bear monitor to come with you. Entry visa when required for research, relocation costs for eligible research personnel and their family. All of those are eligible use of grant funds under this directive. Ineligible costs, you can't cover your commute costs, the costs of commuting. Passport or immigration fees, you are on your own for those. Reimbursement of travel purchased with travel points, unfortunately, and alcoholic beverages are all ineligible for purchase with grant funds. And the fourth directive is goods and hospitality expenses. So eligible expenses, costs associated with networking in the context of formal courtesy, costs in the context of assemblies that contribute to the achievement of research objectives. Ineligible, you cannot buy alcoholic beverages for yourself or others, no entertainment and no gifts. So the final directive is gifts, honoraria, and incentives. So under eligible use of funds, you can buy gifts for elders for participation in research activities, gifts for elders or cultural knowledge holders invited to open research meetings or conferences, especially with prayer. Gift cards offered to research participants as an incentive for participation. And now that does require approval through the research ethics process, which is a separate piece. But ineligible expenses, so gifts, honoraria, and incentives cannot be offered to any members of the research project team or any tri-agency grant recipients. So the authorization of grant expenses. So the individual grant holder, that's you, has the authority on the use of funds, and only the grant holder can delegate this authority. The delegate must be approved by the administering institution. So the example that Amanda's given us is that an Aurora College research associate holds a grant, and that grant holder's co-worker needs some software and decides to sign off on the purchase under Allison's budget because they work together. Unfortunately, Amanda cannot authorize expenses from Allison's grant unless there's an official process of delegating that authority, and there's paperwork and it goes through finance. So be aware, the only person who is signing off on the authorized use of funds is the grant holder. And oversight on the appropriate use of funds. So the administering institution oversees how the grant funds are used and has the authority to withhold or withdraw the approval of an expense from a grant account. So Amanda gives us this example, and it's that Jim is going to purchase equipment under his ARTI grant. Unfortunately, he purchases insurance, but insurance is not covered, so the expense is withdrawn by the finance department, as it's their responsibility to make sure that even if Jim is mistaken in his understanding of the application of the policy, finance functions as the kill switch to make sure that the grant funds don't actually get spent on ineligible expenditures. Here's an example for a change from the proposed budget and research activities. So both the grant recipient and the administering institution are responsible to ensure that expenses are TAGFA eligible, and you are allowed quite a bit of deviation from the original proposed activities in your research proposal, and that's a really great thing about Tri-Council funds. However, they have to be activities undertaken for the general purpose for which the grant was originally awarded. The example we have is for the research cash team. When we originally applied for our SSHRC Connection grant to fund this opportunity, it was going to be an in-person 3-day workshop in Inuvik. So the budget was very travel heavy, and we had experts coming in person to provide their expertise. And after the COVID-19 pandemic, our budget and our activities completely changed when we pivoted to a virtual delivery. And we were still approved to use the funds and to deliver this completely different version of what we had proposed, because it was still in line with the original goal of providing a grant writing workshop for Northerners. So for the transfer of funds, a grant recipient can transfer a portion or all of the funds to an institution associated with one of the members of the granting team. If the secondary administering institution does not have Tri-Council eligibility, then they need to complete some paperwork, but generally you can move funds between institutions. So as an example, we've got David, who's a research associate at Aurora College, and Andrew, researcher with the Satu Renewable Resources Board. And David submits a proposal for a Connections grant, and Andrew is a co-applicant. When they are successful, David agrees to transfer amount of money for costs of the project under SRRB, and both institutions complete the checklist and they're able to move the money over. Aurora College will remain responsible for all the financial reporting associated with the money that's been transferred to SRRB. So a deferral. A deferral is when a grant recipient postpones the grant funds, and you can do that for a maximum of 2 years. And Amanda gives a good example. So a deferral happens before the funds have been transferred to the institution. So this is before you've begun the research. In this example, George is a research associate at the college who applied for an Engage grant and was successful, but due to health issues, he knew he wouldn't be able to work on the study at the time that the funds were granted. So he defers until he's back at work full time. Whereas extensions, as Amanda's noted for us, extensions happen during the course of a project, and they can happen for any number of reasons, but all Tri-Council grants have an expiry date. And if the project is not going to be completed by that date, recipients are eligible to apply for an extension of up to 1 year. The administering institution is responsible for the amendment form and getting that to the appropriate funding agency. So in the example, Nicole is a research associate at the college who holds an NSERC discovery grant, and it'll expire, date in the past, but in August 1st. And she's experienced unavoidable delays in completing the field work, and so she's not going to be able to complete by the deadline. She contacts the research services office at her college and is able to apply for a 1-year extension to complete the research. And to be clear, she's not getting any extra money, she's just getting extra time to spend the money that she already has. So that is an extension. So for residual balances and overspending, any money left over in the account after all the project expenses have been paid is considered a residual balance. So this does not stay with the institution. Residual balances are treated differently depending on the funding agency. So there's more information in TAGFA for the correct procedure. If your project spends more money than you're awarded, your institution is responsible for any additional cost. The Tri-Council agencies don't take those on. And for annual reporting, administering institutions are responsible for reviewing and updating a reconciliation report from the granting agency every year. The administering institutions are responsible for completing and submitting an annual statement of account expenditures. That's a Form 300 for every active grant, and the grant holder is responsible for reviewing these forms. So again, this one is done in partnership between you as the grant holder and the institution. The institution doesn't simply do all of your reporting for you. You need to be in contact, work with your finance department to make sure that they understand what the purpose of each expenditure was, and then you need to be reviewing to make sure you're both on the same page about what was spent and how it was spent and why. And then ultimately, the institution, the finance department, will flip that over to the funder. And that means that you have completed all of your financial administration. And I have no doubt that after your work with Research Cash, financial administration and accounting will be perfect, no problems, smooth as silk. Thank you so much for joining us for this video. Please check out the rest of our resources on the Research Cash website. Thank you, Masicho.